here. So yesterday, after we confirmed we closed all-time high, we had a gap up, right? So you see here, these are daily candles. So we had the close of the 2 days ago. So today it's Thursday, right? Wednesday. On Tuesday, we closed at roughly 2948, and yesterday we gapped up to 2955. So this gap here, right, this was not an institutional imbalance. This, what I like to call, is an exhaustion gap, where basically this is clearly caused by, well, the public, novice trader, amateur traders, because who is with all the excitement, with all the greed, who is buying here blindly on all-time highs, right? It's definitely not institutions who are just buying on the top, not us, right? So this gap was clearly caused by novice trader, and then it rallied a little bit higher, and then we had this huge drop to the downside, right? Yesterday, roughly, I think 1.5% down, and we closed. So how did we close? We closed, now for me personally, again, very exciting, because we have now a clear engulfing candle, right? So this candle is engulfing even the previous 2 days. So we know engulfing for us, right? The alarm bells should ring, our alarm bells should ring. Engulfing candles, reversal sign, matter of profit margin that we have here. So if we look down to the left, daily income, I don't have any demand zone, right? I don't have any demand zone. So the next one, and we have this gap that we discuss every single time, that has to be filled at some point of time, right? And if we can gain some momentum to the downside, all this here, let's say, yeah, that's not a bad trend line. First touch, second touch, third touch, right? So this is all garbage. So if we get some, this is all air, like you can call it whatever you want. This is no, basically, or in other words, there's no demand, because if we look now to the downside, there's literally, and even here we have, even here one more gap. So, but this is just one of these mini gaps, right? Once price comes up, we do exactly this, and here I would also take the wider version, by the way. I would not go for the preferred version, I would take the wider version here. So we can take this, put our stop loss above the highs, or new all-time highs. We do
This S&P 500 trade setup was presented by our mentors in our futures live trading class back in May 2019. During this live trading session, we identified a clear supply and demand imbalance. Our mentors went through a full analysis of the product and set S.E.T all trading parameters needed to enter the trade. This includes a stop, entry, and target, S.E.T. Once our mentors set the trade together with our students, their work is done. Our students can now forget the trade and let it play out without spending more time in front of the screen. This predefined set and forget and get a live trading approach helps our students to master the supply and demand trading skill set without sacrificing their lifestyle. We identified a supply zone, an area where supply exceeded demand. At our online trading campus, our students are taught to sell, go short once price comes back into the supply zone. Now let us take a look at the result to date. This setup already achieved a maximum risk to reward ratio of 1 to 11. This means that for every dollar you risk, you make $11 of pure profits. Let us put this into perspective for proactive investors. If you were to risk $100 of your hard-earned money, you would walk away with $700 of pure profit. Now for our more advanced traders who are proven consistently profitable, by risking $1,000, they would make $7,000 of pure profit. This was a daily income trade setup. These are trades we hold for days and sometimes weeks.